This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. Welcome to the Wealth Roundup for the week of April 24th, 2026. I'm Terry Evans with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. You know, when we were kids, Patrick, we had those little Indian rubber balls. You'd throw them on the ground and they would bounce sky high, and then they would come down, and then who knows where they would go if they hit a pebble or something like that?
Yep.
It's kind of what the markets have been like, isn't it?
Yeah.
Just no idea where they're going.
You know, obviously, flood of geopolitical news, the trickle down effect for, energy being kind of at the core of what's going on in the Middle East. And, we talked in the last podcast how energy kind of percolates into kind of just about everything and why it's so important. And then, there's lots of other things, just, the world, just continues to kind of move on, and the markets, they kind of reflect and they react, so very quickly. It's really, when we kind of start our morning call every day, we're looking to what the Asian markets did hours ahead. So you really have this with the markets, you have this 24-hour cycle. The markets kind of 7:30 Mountain Standard Time here, because they open in Toronto and New York. But yeah, they're reacting to what's happening in the Asian markets. The European markets kind of close in around, they're 8 hours ahead of us too. So it's never it's never ending. What's the great movie with Michael Douglas? Money never sleeps. So truthful. Yeah.
Well, with the geopolitical, the obvious elephant in the room, everything that's happening with the U.S., Israel, and Iran, is there anything else happening in the world that is affecting the markets, either in Canada or worldwide, or is it just that everybody is looking at right now with their eyebrows raised?
So, trade continues to be a big theme. Certainly with the U.S., kind of shuffling the table, this kind of realignment of U.S. relations with everybody, and with the U.S. being the world's largest consumer. Everybody wants to sell to the U.S. market, and so with Trump and his administration resetting the rules, last April, Liberation Day, there is this reshuffling of the deck. People are finding new dance partners, and so I would say that is really key. I would say, what's the world going to expect from AI as it continues to have an impact on our lives and the spend on AI? So Bloomberg report out last week, the expectation is that the U.S. hyperscalers, so the Meg 7 stocks, well, not all the Meg 7 stocks, but just say all the big U.S. tech firms are expected to spend $3.5 trillion on building out AI. So AI capital expenditures over the next 5 years. That's actually 2025 to 2030. So I guess we're 1 year in. So $3.5 trillion. To put that into perspective, the gross domestic product of the Canadian economy is $2.4 trillion. That's all of Canada. So a greater spend, over this 5 year period of time. So, and just thinking, yes, some of this we think it's going to be spent on chips, but there's more to this. There's all of the infrastructure and energy and licensing and redeployment of labor in order to do all these things. So I think with the Middle East is, an event that kind of touches everybody, but in the background, we're having a seismic shift in the global capital markets, for sure.
Let's hone in on Canada, talk a little bit about the Canadian Business Outlook Survey. What's that all about?
Yeah, so this makes sense. So we published last week, and it is a combination of work put together by Stats Canada and the Canadian Chamber of Commerce. And, really important to determine kind of where Canadian business is at. And what Canadian businesses are telling us is impacting their operations and their future plans. And why this is important is that government uses this to determine policy. So, changes that are required to support businesses, which in effect support labor, jobs, job creation. And, what Canadian businesses are saying right now is that they do have some modest optimism. So, again, we were kind of talking about Liberation Day. So we're basically a year out from our relations with our largest trading partner. Kind of big question marks about that. Obviously, we know that there are real impacts that have been caused by tariffs. So what businesses have been seeing is that, at least from last year, is that they're saying things haven't gotten significantly worse. I guess that's being the optimistic side of it. And so in their business to business interactions, they're expecting some modest growth. So they are somewhat kind of sandbagging what they think that the opportunity is, but they continue to have some concerns about rising costs of commodities. Energy would be one, and labor would be key. And the other thing that's being highlighted, which probably not too surprised about, is that there's some regional disparity. So more optimism coming out of the prairie provinces, and actually, strangely enough, the Atlantic provinces. So it's nice to see some positive outlook coming out of the Atlantic provinces, but more pessimism coming out of, say, Ontario and BC, where the high price of housing continues to be problematic. So yeah, so I think that some of the other ways that the survey is used is that banks use this survey when they're determining whether or not they want to be lending money, how much they want to be lending, or what they're pricing loans at. And then businesses would also use this when they're determining inventories. So how much product do they want to order and keep in their warehouses? Because a buildup of inventories usually is not good for the balance sheet, or for their expense side of their finances.
Affordability is a huge part of everybody's thought process these days. It doesn't matter if you're a middle class family, if you're a young person trying to start out, if you're a retired person trying to figure out your retirement savings and how you go about that. And a lot of times people look at things to gauge that, and it starts with the cost of groceries, the cost of rent, or your mortgage rate, or something like that. And of course, everything that everybody needs is gasoline to get
Yep.
around. Now, we've seen the reduction in the gasoline tax, the temporary removal. What does that mean for everybody on every level, I suppose?
Yeah. So the peak driving season for Canada is the month of August. So to kind of put that into perspective, is that the volume of gasoline used on a monthly basis is 15% higher in the month of August, than it would be in, say, a February or March, right? So we're kind of going, the direction is for higher energy use. At the beginning of the Middle East conflict, we were talking about oil futures, because oil delivery. So often oil that's already been paid for gets kind of shipped, and that price has been set. But when we're selecting new orders for oil and gas, is that we're buying usually 4 to 6 weeks out. And so we're already looking at that high volume season, peak driving season for Canadians. We had a recent read on inflation. So Canadian inflation kind of ticked up, so sitting around 2.5%. So the expectation is that inflation is going to rise as we move into the summer, and probably peak somewhere with a 3 in front of it. And so, that's a significant bump up. The other place that we're expected to continue to see a rise is on grocery costs. So as you were saying, people are noticing their higher prices at the pump. Well, I also hear it at home, and I see it myself when I go to the grocery store. Right? Is that you used to be able to go to the grocery store with $100 bill and come home with change. you know, good luck. Good luck
Nope.
doing that these days, right?
No.
So the temporary removal of the federal excise tax on gasoline is significant, because it's going to provide some modest relief going into a period of time where we're expecting prices to get higher because demand is getting higher. So it makes sense. And I think the thing to kind of look at is, will it have to be extended? So this was only supposed to go until the fall, I believe. But will it be something that is extended? Is something to look for. We had, of course, the carbon tax relief last year. So these are all kind of measures that are kind of being put into place to help Canadians.
We've talked a number of times on this podcast about AI and the energy, the power that it takes to, well, power AI for that matter. So energy and power has been the topic of discussion when it comes to investment. How do you invest in energy and power?
Yeah, so a couple different ways. So what's the challenge? So the challenge is that we expect electricity demand in North America to increase by about 3.5% per year, at least over the next 5 years. That's matching the global growth in GDP. So this is really significant. And this is for just mainstream energy usage, but also because of the expected demand from AI, which is high energy demand industry. So when we think about what it's going to require to build out this additional capacity, we first of all think of just the development and the licensing and the permitting to put in more power lines. I think here in Edmonton, we would all get this, during construction season, which used to be just half the year. Now it seems to be, all of the year. And so, those hardworking construction companies that, slow us down every day, but obviously it's very, very important is think about all of that work, because a lot of that electricity is both above ground and below ground. So you have all of that work. And then you have all the materials and planning that go into building out that work. So you'd have consulting companies, you'd have companies that are already in that business of providing that type of infrastructure. They are called on to provide that expertise to build out more capacity. So we would start off with this idea of infrastructure. And so we have some, phenomenal infrastructure type companies in Canada. We have a great company that happens to be headquartered in Edmonton, Stantec, which is in that business on the planning for things like infrastructure. We would have businesses like Brookfield, which is another phenomenal infrastructure business. But also we would have the utilities companies, communication companies, pipeline companies. They would all be infrastructure. And then you'd have all the commodities that go in behind that for regular energy and renewables. So you would have copper, which is, always required in electricity transmission. And then you'd have batteries. So you'd have things like nickel and cobalt, things like solar. You would have silicon. All of these things are required to be able to grow this out continuously, over at least the next 5 years. And it's hard to imagine that energy usage is going to flatten out at any point in time. So I would say that there's lots of different ways to invest. In the past, we used to say that, investing in utility companies was really kind of a boring investment. And we do have to be cautious about the utility business because government steps in with utilities and has kind of definitely has a say in the end pricing to consumers. And this permission to go and increase pricing, very, very important for us as investors to say, okay, we like that business, but if we have government restricting those businesses' ability to pass on those higher prices, is that we have to be kind of cautious about how much capital we're deploying there. But we would expect the utility businesses would be going back to the regulators and back to government and say, look, we've got this additional demand. It's going to cost so much to build it out. We're taking on that cost. Maybe we're partnering with government to build it out, but we're going to have to pass on these higher prices to consumers. So we see kind of this full cycle in terms of this challenge, the need, and then how we're going to meet that need. I think what's interesting is that it's happening at a time where we can also see lots of other, investment opportunities kind of arising in the market. But what I like about this idea of investing in capital in this energy business is that this is a different theme than maybe what we've been talking about for the last 5 years. It's all been Meg 7, Meg 7, Meg 7, which, by the way, technology stocks have they've done actually quite well in the last couple weeks after having a really rough start to the year. Really nice to see that there's some other great businesses out there that have an investment thesis that makes sense, that we as investors can get behind because we understand the need.
When you talk about the Meg 7, is there a Meg 7 for the energies, like that includes Stantec and Brookfield and nickel and copper? And is there a group that you can utilize as an investment advisor?
So there wouldn't, but there would always be like with the in what we would call the exchange traded fund product lineup, which is we've now had a really growing offering with those type of investments really for like the last decade. And it's very easy to bring kind of a new exchange traded fund to market. And often these will be marketed as sectoral investments. So yes, you can definitely, even within the BMO lineup, we would have a BMO exchange traded fund that is specific to Canadian utilities. We would also have funds and ETFs that would be specific to Canadian infrastructure. We would also have ETFs that would have North American exposure to infrastructure. So there is a way to be more specific to that industry. So kind of like when we talk about the Mag 7, we talk about a group. Yes, you would be able to take a sector like utilities to be able to invest directly either via an ETF or a fund and have lots of options.
Okay. For wealth management and to start your investment journey, you can find Patrick's contact information at patrickmleonard.com. Please leave a comment below, share with your friends, and if you know anybody who is starting to look into a destination for their investment insight and wealth management, please reach out to Patrick. Again, patrickmleonard.com. There you go. That wraps up the Wealth Roundup for the week of April 24th, 2026. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Thanks, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.